good evening again. We are scheduled to do some tax calculation. Those of you would have received the course outline, which indicates a lot of the modules we'll be covering. So we're looking at personal and corporation tax, and can disconnect the audio. All right, so we are going to be covering some of the before reaching into the tax, we're going to be looking at from the trial balance to the financial statement, the basic financial statement. So today really is an introduction to preparation of basic financial statement. So you don't want to assume that everybody who is doing the tax course knows how to prepare it. So we're looking at from a get a TB, can you carry the right up to filing the taxes? So other areas.
Excuse me.
Yes.
I'm not sure if it's me alone, but the audio isn't so clear, or like the volume is a little low.
Yeah, we're the audience type of inside everything. A lot of the time it seems. No, man. Yeah, you can remember that. Yeah, and that's where only the disconnect from that one. But most of the time, I have a disconnect on itself. This is if you're connected to Zoom, then there's disconnect the audio. All right, so let me just make sure my audio setting is fine as well. So microphone mode, noise removal default. All right, system good to go. All right. All right. So let's go again. Hopefully the audio is much better. So yes, so today's session really, as I said, is an introductory session where we're going to be looking at basics of accounting and what are some of the basics in terms of preparing financial statement. That's for today's session. So yes, we might wrap up a little earlier. The other sessions, however, we'll be now getting into more details. So you're going to have an assignment now because it's a practical accounting course. The assignment for today's session would be I give you a trial balance and you prepare a basic income statement and balance sheet. Basic, meaning I don't have to be concerned about the format. All I'm going to tell you have assets, liabilities, equity, and you put them under that heading, right? That's pretty much what we're going to be doing. Income statement, revenue, cost of sales, expenses, net profit or loss. So it's not technical, right? But it's just really, okay, I have the TB, what is expense, what is revenue, what is asset, and then I see if I can prepare a basic income statement and balance sheet. That will be the assignment for today's session. So for the second session, and I think I probably should just document something. We have an idea of looking at all 6 sessions. So today, as I said, will be the shortest of all the sessions, which is accounting basics. That's basically what today is really about. Trial balance TB to FS, right? So accounting basics, we're looking at TB to the FS. I'm not the whole detailed FS with the notes, but income statement, balance sheet. Because you need at least that to be filing taxes, right? So at least you should be able to do that to file taxes for somebody. A lot of people ask you to file taxes for them, they just have the information, they have nothing ready. So we're really trying to see somebody with nothing ready. Can you file taxes for this person? That's really what the course is all about. Now, the second session, first thing we're going to do is review the assignment, and then we're going to be looking at understanding what's allowable expense, what's disallowable expense, and GCT. So that is where some of the tax is going to come. Again, that's where the tax for practical taxation is going to come in from session 2 onwards. So as I said in our second session, let's just say the key item in session 2 will be GCT. Session 3, the key item will be capital allowance, but we'll be doing cases, right? So for each session, we'll be looking at cases. So session 3, the key one here is going to be capital allowance and to some extent deferred taxation. Session 4, we'll be looking at employment tax credit and deferred tax. Session 5, sole trade account, filing SO4, SO4A. All right, okay, this person is employed, but they have a business as well. How do you file that SO4? Because yeah, they're earning salary, your taxes are being deducted, but they have a business, they're hairdressing on the side, or whatever they may do. how do you file your tax? How do you gather their income? And then the sixth session, we'll be looking at filing payroll returns and anything else we need to consolidate in terms of filing. So at the end of it, you should be able to file SO2, GCC, SO4, SO4A, ITO2, ITO7, and also have an idea whenever persons are being, let's say, being audited. So generally, you'll find a lot of the time when people have registered business names, you hear that they're being audited because they file new return or they file surplus, whatever it is, then you hear they have an audit. You know what? I get a letter that I'm going to be audited. What must I do? I have an idea. Okay, how to advise them what information is necessary when they are under tax audit. So that's the whole, a little synopsis of the entire course. So without delaying any further, as I said today, introductory is we're going to be looking at financial statements. So as I said, the email I sent, I'll be sharing my screen. I'm hoping everybody who is not here, so I know one person joined late, so that person may not have received, that person did not receive the email, so I'll send it by the end of the night, before the end of the night. But everybody else, I hope, got the email. But I'll be sharing my screen for those who are not in the room. How much of the 8 of you that's not in the room? So let me just bring it up. Second, which folder is that in our tax? Okay, notes. Accounting, yes, and the name of the handout says Accounting Basics Notes. So that is the one we are looking at, where it starts with financial statements of a sole trader. Even before that, there is something I want to sometimes we end up with a trial balance. Sometimes we're doing some form of accounting. We don't have a trial balance. And then we don't know what to post where, right? So there is a concept you can look up on YouTube that there are persons who go on indeed. There is a word that is used to solve all form of double entry accounting. In what debit, what credit, right? And that term that is normally used is dealer, right? The term that is normally used is dealer. If you understand dealer, so once you know what's an asset, what's liability, what's equity, what's revenue, what's expense.
Excuse me,
Yes.
when you move away from the laptop, we're unable to hear you clearly.
Okay. So once you can identify expense, assets, liability, equity, and revenue, then you will be able to know, okay, what do I debit? What do I credit? Now, what is this dealer concept? What does dealer mean? What dealer stands for? So you know we have what we call T account debits and credits, right? You don't have to express yourself. But the thing is with dealer, you will see what's beautiful about dealer, it has 6 letters, and you go across in the center, you realize 3 on one side, 3 on the other side. The debit side, right? So these 3 is the side that's debited, and these 3 is on the side that's credited. But what do those letters represent? The D stands for drawings. The E stands for expense. So that's the first E. The A stands for asset. The L stands for liability. The E stands for equity. And the R stands for revenue, right? So basically what that is saying is that anytime any of these 3 items increase, you will debit them. Anytime any of these 3 items increase, you credit them.
What does the R stand for?
Again, the R stands for revenue. Revenue.
Okay.
Like sales, income, right? Equity can also be known as your capital, right? But we're using the letter because you put a C in that not going to spell a word, right? So that's why we end up using 2 E's. Okay? So once you remember dealer and you know that, okay, the owner draw money from the business, so the drawings increase. So you're going to debit drawings. Okay? All right, money in the business, the money is normally an asset, right? The asset never increase, the asset decrease. So it's going to go the opposite way. If the asset increase, it's debited, right? Because on this side, that's all. So anything that increases drawings, expense, or asset is debited. Anything that increases liability, equity, or revenue is credited. So if you borrow money, it's a liability. it's a credit entry. If you put capital in, the capital is equity, so it's a credit entry. Revenue income, it's a credit entry, right? However, if they increase, then I'm going the wrong direction. So if they decrease, then it flip, right? Because if they decrease, it flip. So if the asset decrease, the asset naturally is debited, that's all. But when something decreases, it messes up the whole system. So you're going to credit it, right? And that's it. That's debits and credits, right? So that's debits and credits in a minute. So just in case you didn't understand debits and credits, that's it for debits and credits, right? So I wanted to make sure we get that out of the way first. So hopefully we all understand debits and credits. So that's what you call the hack for debits and credits. Dealer, drawings, expense, asset, liability, equity, revenue. Know what they are, and the natural position is a dealer position. The first three naturally is debited once it increases. The next three naturally is credited right on the credit side once it increases. However, when they decrease, they're going to go in the on the opposite side. Okay, and that's pretty much it for. I know y'all probably get debits and credits very well, right? But what I can say is that I remember when I was well, I still audit, but when I was in an audit firm, it was very revealing to recognize that many accountants don't remember debits and credits. Because from the debits and credits in high school, when you're doing the degree, sometimes you don't really touch the debits and credits so much, right? A lot of the time, then just figure out, right, how to use AI and then know what going which side, right? Right? So, but let's just make sure that we all understand debits and credits or have a basic idea. Moving on, the notes we're looking at now is financial statements. Now, how do we prepare? And I said the ones I'm going to focus on, the income statement and the balance sheet. That's what we are going to focus on. The first handout, as I said, is the one that we says the accounting basics notes. So let's take a quick look at our accounting basics notes. Right? So the first thing it mentioned, introduction to the income statement. Right? Again, I'm not going to go through all the details of the notes because I'm just trying to give you an appreciation of just doing the basic accounting first before we get into the tax principle. So generally the tax course is 5 sessions. This additional session is to ensure that you at least can prepare the financial statement. Okay, so that's what the first session is. So open you to preparing the financial statements. So income statement. In preparing an income statement, the objective generally is to know 2 things, the gross profit or the profit for the year. And that's what we see in the notes there, right? You don't really need to take this if you have the notes, so you can make your own notes, right? The main thing you want to know, what's the gross profit, which is basically the revenue minus the cost of sales, right? So that's what will give you what your gross profit is. And then you have your net profit, meaning after that, then all other expenses taken out. Did you have a surplus? Take out all the other expenses from your gross profit, and then any excess is known as a profit. If there is a deficit, then it's a loss. Okay, those are the key. That's the objective of the income statement. You want to know if you're making any money on the goods you're selling, and based on all the expenses you're incurring, did the business generally make a profit? So the first thing is, okay, I have a grocery. I buy the flour, $6,000 for the bag, and I sell the bag. How much did I sell it for? Did I make any money on the bag? Okay, you sell it for 7,000, whatever. You make 1,000 on the bag. That's the gross profit. So you want to know that first. If you're clearing it on the items you are selling. The next thing you want to know, okay, in order to have the shop, I have to pay rent, I have to pay light, water, and staff, and the cashier. Then I'm going to say, all right, after all of these expenses, did it make sense? So that's the objective. Now, the basics of an income statement, and we're going to see it in the other hand of the Word document I emailed, is the 2 things you want to ensure you have is your revenue. Just as we said, here are our objectives. Gross profit is revenue minus cost of sales. Net profit is your gross profit minus your expenses. Okay? So it means then that the income statement will have revenue. The income is going to have less cost of sales. Okay, which is basically the cost of the items you are selling, reselling. And then you're going to have your expenses. Again, some people might say, yes, selling and distribution, administration, financing. I don't care about categorizing. This is not a financial statement course, right? This is a taxation course. So all you need to know, did the man make a profit or a loss? And then how much tax need to be filed, right? So that's it. So as long as it's in the right, revenue is where revenue is supposed to be, cost of sales where it's supposed to be, expenses where it's supposed to be, then that's fine. That's really, that's the focus. So I'm not going to be saying, okay, we need to have in these three main categories. That's unnecessary right now because we are dealing with taxation, not IFRS, right? That's another course you can do, but that's not today. It's not IFRS we are doing. No. So now it mentions the uses of the income statement. That's all well and lovely. But then it shows you, it shows us we have an example. I can give you this one. All right. So on the second page, it shows you just deep Saha trial balance. So on the second page, it goes straight into the trial balance. Right, where it shows the sales revenue, revenue returns, inventory at this date, purchases, purchase returns, rent, etc. All of that is representing the trial balance. Okay. Now, usually, as I said, you should be able to try and identify what falls under which one. So, for example, the dealer concept, I'm going to use the word dealer now. And even though it is an illustration, we're going to try and identify where does each of these fall, right? So the sales revenue would be the revenue, right? So revenue returns can be revenue too, just reduce it, right? Because them return, it can be revenue, reduce the revenue figure, that's fine. Inventory as at the opening stock. Now, the opening stock, normally that's an asset, right? But one of the things in calculating cost of sales, and we should know this, and this is why we are doing it practically, not just on the face of it. When you are doing cost of sales, the cost of sales is reflective of what you started out with, your opening stock, plus your purchase, and everything related to it. Whatever, carriage in, less purchase return, whatever. But opening stock, what purchases, less closing stock, right? Now, why am I saying this is important? And all our sessions are recorded, so the recordings will be shared with you all as well. Now, the opening stock plus purchases, less closing stock. A lot of businesses, so I want us to pay attention, a lot of sole traders, many times, in order to show that they are not making any profit, they will expense all of their stock. Even though they have a whole store of stock there, everything they buy for the year, then why you tell them, no, that's the expense, but that's the expense. They say, no, man, but you sure you have stock. You tell them, say, nothing is in the shop as at the end of the year. Yeah, man, but no, not really never inside of the store. Not really never inside of the store. So you're kind of trying to figure out, yeah, but a lot of the time that's because they don't want to pay taxes. We are doing business, and as when we are doing ethics, we have to ensure that we monitor what we're doing. We have legitimate expenses, and certain things that are not supposed to be expense, you do expense. Why? Because when you're audited now, you have a problem, right? You have a problem because if you have nothing on December 31st, how is it you sold 70,000 on January 2nd? Can you close January 1st? Where they sell, where you sell, you breathe out, you spit out everything, you vomit out where you eat. How exactly you get that inventory to sell, right? How is that possible? Right? And you probably get a big sale probably on the 2nd of January. Everybody, people just come by whatever people get and then spend money. What did you sell from? Right? So it is important to know cost of sale. Whenever you're filing return for somebody who is selling items, ask them for them closing stock. Right? Ask them for that listing. Right? Because you need that listing. Because them the judge is their first year of business, maybe they don't have any opening stock. That's fine. Because them just start business. So they bought, they say just purchases, but they do have closing stock, right? Highly unlikely that them they run out, unless the business done, unless the business finished before the year finished, right? So it's important to ensure you get the closing stock, right? So for cost of sales, opening stock and purchases and the necessaries. So whether, you know, as we said, you have to less purchase return because you give back the supplier or there was carriage inwards and whatever, but not going into technicality. We'll just treat everything as basic one. So add the net purchases, less closing stock, and then you less your expenses. So going down now, purchase return, as I said, could be a part of this, right? You could reduce the purchases, that's all. So going down the trial balance, so we look on the sales revenue, we have the revenue returns, so both of them we say can be revenue items, the revenue return reduce the revenue. Inventory, we said that's opening stock is going to help you to calculate the cost of sales. So that opening stock is going to be a part of calculating your cost of sales, right? Purchases are part of your cost of sales, right? So in the grand scheme of things, it's an expense, right? Because in the income statement, really and truly, you have two broad headings, revenue, expense, right? So two broad headings in the income statement. It's just that now your cost of sales is normally separate, okay? So rent, we are at rent now, expense. Wages, expense. Electricity, expense. Admin, fuel, carriage in, insurance, all expense. Stop, right? All of those are expenses. They go in the income statement. Good? Everything at the top so far that we dealt with goes in the income statement. Okay? Now we have building. That's an asset that goes in the balance sheet, right? Asset, balance sheet. Okay. Motor vehicle, asset again, balance sheet. These will not go in your income statement. What's going to go there is like the depreciation, right? The trade receivables, these are people who owe you. Balance sheet, not income statement. The bank balance sheet, not income statement. Cash balance, balance sheet, or statement of financial position. Payables, same thing. Liability, okay. You put loan, liability, balance sheet. Equity, balance sheet. Drawings, balance sheet. But the drawings can going to basically reduce your equity. Because as we said, drawings naturally debit, right? And equity naturally credit, right? So some people just offset it because basically the same owner money and then the owner take money to the business. So they normally offset it. Okay? And then it's in the notes, the closing stock. So they have closing stock, we're good to go. So from you start doing the account, before you even look at the bottom of the notes, you don't see any closing stock, right? So they did provide closing stock. So we're going to utilize the closing stock as given. Now I want us to look on Just Deep now. So that was, so we talked through it. Let's look on the information now on the next page, the actual income statement. So as we said, sales revenue, less the revenue returns because they gave it to you about the revenue, net revenue is less, 75,000. To get the cost of sales, we have our opening stock, add our purchases, add our carriage in, less the purchase return. Why? Because we give back the supplier, right? So we don't have it. So less the purchase return, give our net purchases, less the closing stock that give us our cost of sales. Then we less all the expenses, and then that gives us the profit for the year. So we less all the expenses, and then that will give us the profit for the year. Okay? So that basically is the first basic income statement. All right? So that was for Just Deep. Let me see what I had added to this here. So we'll be straddling through the two set of notes. So I'm gonna be looking at pausing here. We're gonna continue on that note, but the Word handout, the Word document I sent, you have that open as well? The Word document I had sent, we said how to prepare financial statements the right way. I'm gonna be straddling between both. So what information is needed to ensure that you are preparing accurate financial statements. Let me just share this one now. So I'm just going to go through this, all of these pages right now, then we'll come back to the other handout. Then we return to the other handout.
There seems to be an error on the income statement.
Yes, what's that?
The purchases return. It said 38,300. I think on the TB it said 3,000.
Yes,
And if
it's incorrect, but the overall calculation.
The total is correct. Yeah, it's a typo, but the overall total is okay. Yeah, okay.
All right.
Good
Okay.
identifier, right?
All right.
So Right, where is that Word document? Why am I not seeing it? Right, stop share. Open that Word document. Here. Okay, here we go. All right, so based on Lindsay now, Lindsay basically said, this is how you should prepare financial statements the right way. And some very good points are actually in it in terms of the setup. So one of the things she mentioned that yes, preparing the FS, it is a very comprehensive task and you need to know how to do it in order to keep your business up and running. Now, there are 5 steps that were given in terms of getting started in preparing financial statements. The first step, and this is, as I said, if we're prepared, we are doing it for our own selves or we are doing it for others. Step 1 is gather all relevant financial data. Right? That's the first. Gather all relevant financial data. So before you do anything else, you have to get your ducks in a row. So what you need the financial data, invoices, receipts, bank statements, expense reports, everything, petty cash, vouchers, whatever it is, everything that is necessary. You need to get all the relevant financial data all together first. Right? So they can't give you a part and say, no, only have the bank statements for 3 months. But I remember they write down something for next month. No, you need the information for all the months. I mean, that's one of the things we're going to look a little bit on incomplete records, because that's another key feature you will see when you're dealing with business for sole traders. They don't have everything, right? So how are you going to prepare it if they don't have all the information? Sometimes you have a best estimate. There are things you can do to have an idea, assuming that is not 80% missing, right? Right? Because if it's 80% missing, that's a problem. Maybe if the other way around, if it's 80% them have, then you probably can do an analysis to have an idea where it should be. Okay, so one of the first things, get all the information that you need, all the information that's necessary, and do that for yourself. So you just start a business, every receipt, throw it in a bag or something. If you know it's a receipt, but them fade out in a week, take a picture of them same time, right? Because after a week, it's gone. Whether it be a toll or whatever it might be, even some very important receipts, everything fade out in the space of a week or 2, right? So take a picture of it. Yeah, you're not documenting it now, but just take a picture, have it saved, right? So that's very important, because at the end of the day, you just start a business, you need to know whether or not you're making money. Sometimes people are of the mindset that they just don't want to pay taxes. Okay, that's understandable, but you want to make money though. That should be the greater objective. The greater objective should be to make money, right? So a lot of times people put themselves in a way where they really don't know how the business is doing, because they're just trying to not to pay taxes so much. They really don't know if they're doing well, or them dipping from them salary and sustaining this business that it don't make sense. Them don't know, because them just try to cook and them just not want to pay the tax, right? So the most objective a lot of times should be, am I making money? And you look on life this way. If you were making nothing before, right? And you make 5 million today and pay $1 million in taxes, you still have 4 million, right? It's unfortunate people say 1 million in taxes, but you just get 4 million where you never did get any at all, right? So you have to look at it from that perspective. Don't look at what you're paying, look at what you make. Because doing the business, when you're doing it, let's say, no, you make 5 million, but I've got to pay $1 million in tax, so that I end up with 4. That means if you make 7, then come up with 5, right? So that should be what should be your motivator. Unfortunately, people always look, how much tax come out of my salary. The only reason that come out is because you get a salary, right? If you weren't getting a salary, you wouldn't pay no taxes. And that you prefer because you don't want to pay no tax. Well, don't get paid, right? So that's why sometimes this mindset is, you can't believe that 80,000 come out of my pay last month. For 80,000 come out of your pay last month, it means you earned more than $80,000. Because tax is not 80%. Clearly it isn't, right? So that's one of the things that we have to put in our minds, that may have make money. All right, you look enough, agreed, and you work hard for it, but you make money, right? No, you don't have to tell me. I've been doing this for many years.
Don't know where the vehicle come from. I'm not hearing it.
Yeah, man, it's very, very, very difficult, because then they say, but we never make the money, We never really me can't see them. Me have nothing in my account, me have nothing for show feet, you know. Yeah, but yeah, man, that's typical. Even if them buy one car cash, even if them add on 25 room on the house, it not really matter. It's just same way. Them now make no money, them not see it. Right? Because right now them not gas in the car tank they for E. Yes, right now the tank they for E and them don't know where them get gas from. They hold them for period, them not sure how them get for period. Yes, and this are them I tell them probably I forgot nobody pay the credit card to pay our bill. Things like this. No, this I've heard it. I've heard it. I mean, they're very creative. But as I said, for us, make sure say we keep it straight. Say, you know what, we want to make a money, all right, budget out the tax too. Right? So make a money, budget the tax too. So budget that as well. Right? Because that's just a part of being legit in the system. You know, want to go out of prison, you just want to do your thing normal. And when you are having 2, 3 sets of accounts, I don't know. I'm not that smart, but that's too much brain work. That's too much work to carry so much. I know people maintain, I've worked with people and I know they maintain 2 sets of books. And this is why sometimes when you go in a store, they will say, give me a discount. Who are you paying? Cash or card? Because the cash don't go through the system. The cash is what is written. Oh, you pay cash? All right, good to go. We're not paying a tax on this, we can't get this discount. Right? So a lot of the time when you hear people say, when you say, boy, you can't do better, how you paying? No, you know what that means. How you paying? Yes, man. Yeah, man, but I'm not Chinese alone. Anybody you go to, and let me tell you, 90% of the people, you may not know, but because I've been in the back office and I've been in these places, I've been in sales. That was actually one of my first profession. And I know whenever you're asked a question, when you're asked, how are you paying? Right? How are you paying means that will determine whether or not I can give you a discount. Right? That's what it means. And most of us know when they say, how are you paying? We're trying to say, I have enough cash in pocket. Because we know that that's what it means, that if I have cash, that I will pay less. And we know that. We know when the question they ask, we know we probably don't know what tax to avoid. Maybe we don't, right? Right. So, but we know when somebody say, how are you paying? You know, say, all right, I want to have enough cash. Yeah, because we know if we answer that question, right? So, as we say, make sure we have all our records so we are able to check what we have, know whether or not we are making money. And as people, as I said, make it be a part of your budget. So this is what I have to pay, have your payroll taxes, and people carry it to the extent where they do the same thing. So you're working for an employer, they're not paying your payroll taxes because they're coming up with this. That's the same mindset they have. So you go to NHT to get your loan, and they're telling you there's nothing being filed for you. There's nothing there for you. No contribution, even though you are being contributed. And this happened to a whole heap of people because the same mindset. The mindset is, for them to go pay 1 million in taxes. And it's not their money. It just come out of yours. Then they're supposed to give you. Them take it out of yours, but them say, we can't go cut a check for 1 million. We don't have it. Yeah. Right? So, and that's why I was saying, if you not get rid of the mentality, then it just festers. Still even you yourself get burnt. Because you want to do that with your little business, and then when you go for NHT, you pay, you realize you don't have nothing to claim. Right? You don't have no pension, you don't have the NIS, because what? It's not being paid. And you know, one discover the NIS time because you can't work that time. The reason why you go claim is because of pension time. Right? So it is important for us to, you know, as him said, you can't convince them, therefore you have to continue. You have to continue to make sure you maintain that mindset. The second step is categorize and organize, right? Categorize and organize. So know what are assets, expenses, liability, revenue. So the second thing is when preparing a financial statement, categorize and organize. Now, what is good is that most trial balance, when you're setting up trial balances, most of the time, the layout of a trial balance, if you're using an accounting system, a lot of the time you will find the layout to be standard. So even though you just did that question and you had all the stuff at the top, that was just because they want you to identify the income statement. But usually, when a trial balance is being set up, you have all the assets at the top, the liability in the middle. So if you are setting up something from scratch, you should set it up in that order as well. So your account number can be, let's say, 1,001 to 2,000, for example, for the assets, right? And then for the liability, maybe 3,000 to whatever, right? And then normally after that, you have the equity. shortly after the equity, that's when the income statement lines normally come up in your TV. Usually the revenue items, the income items are what go there first, and then all the expenses are usually listed thereafter. That's usually how your TV looks. So the assets normally on the top, then the liabilities, then the equity, then the revenue, then the expenses. So that's normally how most accounting software is set up. So if you are setting up a trial balance from scratch, ideally, that's how you should also set it up. How that helps is that that's the order which your balance sheet looks as well. And then below it is your income statement, right? And then normally net profit or loss is what feeds up into your equity, into your balance sheet, right? So that usually is the order that you will find your trial balance to be. So when they say categorize and organize, you're putting them in that category, so now you can set it up. So if this client did not have a trial balance, you can actually set up a trial balance. Because now you know, all right, these were all the sales invoices, these are all the rent, this was all of that. So now you put everything together in a different files, and you can set up onto TV for yourself or for them. All right, the third thing now is draft preliminary financial statements. Okay, so now you have them in category. You can put everything together. Everything then at a special category. You can put up a little income statement now. All the income, revenue, cost of sales, expense. Because everything is categorized already, set it up, see whether or not they made money. So how do you do the income statement? So, and these are the steps. Right, so these are the steps. List all the monies coming in. That's the income. Okay, that's your total revenue. Number two, everybody's on that page, right? The other hand, everybody on that page, right? So how to drive an income statement? Okay, so number one, list all the money coming in, that's your revenue. Find the cost of sales, that's the money you spend to make the products, and you all had that. Subtract it from the revenue to get your gross profit. List the regular costs, subtract them from the gross profit, right? And if you have any other gains or losses, taxes or interest or those things, you add it, right? And then of course, figure out what's your net profit or loss, okay? Those are the simple steps in terms of how do you draft your income statement, okay? And that's that. That's a simple step. The second thing now, how you draft a balance sheet. So on the next page, how you draft a balance sheet. Again, add up your assets, list your liabilities. You can subtract it from it to get your what the shareholder equity is supposed to be, right? And make sure that everything balanced, because it should balance. If you have everything accounted for, it should balance, right? Because then your profit or loss would go into the equity amount, whatever equity you started with, you would have that. Any movement, you account for that, and then it should balance. Okay, because your asset minus your liability should equal to your equity, right? And that's it for your balance sheet. I said we're not doing the cash flow, but I gave you the notes for that, how to draft a basic cash flow. Now, step 4 is review and reconcile the data. So you have to ensure everything is accurate. Review every entry, make sure that assets are where assets supposed to be, expenses are where they're supposed to be, the things are matching up, and the balance sheet balances. That's the 4th step. And the 5th step is finalize and report. So now finalize the report, and that pretty much covers what we want to look at in terms of that basic preparation of financial statement. So a little bit more is there, but those are some of the key things I wanted to take from this handout. We can return to the other handout now. So these notes are yours. So yes, even though I'm scanning through the key points, you can read through and go through them in far more detail. All right, so we're gonna skip right up to where, hold on a second, where we have the section on incomplete records. So you're gonna just skip until that point. So there's a good bit there for those who really want a good refresher, but I want us to look at the one that says incomplete records. Let me just reshare my screen. All right, so in terms of incomplete record. So as we said before, sometimes sole traders especially don't have all the information necessary. They don't have all the information that is required to prepare the financial statements. So there are sometimes there are things that we can use to have an idea as to, you know, how we can prepare the financial statements, even with missing information. Even with missing information, sometimes we can prepare the financial statement. So some basic thing they do, they give you, what they said here is, what if you have information on what your opening capital was, right? What if you had information on what the drawings were? And you know what the closing capital is? Then yeah, it's saying you can have an idea whether you made a profit or a loss, because that pretty much is what makes up the equation. Now the thing is, and this is one of the reasons why I said this, it is very important to know how you calculate each thing. For example, cost of sales. Cost of sales is one of those key things, right? Where sometimes the business themselves, you really want to know, all right, what is the actual cost of sales? We're going to use 3 key items. So we're going to say opening stock, the same 3 I used before, purchases, and closing stock. Okay? So opening stock, purchases, and closing stock. Another item that we spoke about was gross profit, which is revenue minus cost of sales. Okay? I'm using this because it's a practical course. So we're looking at things that you have generally experienced. Okay? Now, what if this individual come to you March 12th to do the filing, March 15th? Now, they come to you to do the filing, they give you all the information, they say, where's the closing stock? Well, I never remember said I'm supposed to do a stock code. Right? So they just have all that information. What are you going to do? You don't have the closing stock. Now, the main thing you're going to do now, you don't have the end item. This is not true. What you can do, however, is you can have an idea what's your average gross profit. That's all. Because if you are selling a certain set of items, you can select the items, the fast sellers, the items that you know that them sell now. It's all right. Let's say select the top 10 items, right? So the top 10 items might be, let's say the top 10 items might be mackerel, oil, flour, whatever, right? So you have the top 10 items. Now, okay, who you buy this from? Sambars, Derrimon, who you buy this from? Who you buy this from? Brace, Muslim, whatever. So you get the bills, because them get the bills where they buy these things from. Right? Okay, all right. Them show you the sales, how much them sell it for. So then what you're going to do, you're going to use a basket to get an average gross profit for the key items. So okay, let's use these 3 items. So this one, then pay $80 for it and sell it for $100. Okay? This, then pay $90 for it and sell it for $150. This, then pay $6 for it and sell it for $90. Right? So what you're going to do now, you're going to say, all right, I'm going to do a weighted average at this thing as for 1. That means I make 25% on this. They'll make 67% on this, they'll make 50% on this, whatever, right? So you have those are the key items. Look at the volume, and then I'm just going to do a rough. Don't follow my head, that is just described, right? So just do a rough thing and I say, all right, it looks like them keep it somewhere around 40%. Cool, based on the way the items on themselves. No. All right. They gave you all the purchases, right? I believe this is a January purchase, they have to push it out. Right? Because all things when they buy January this year, they they realize that they inside it, right? So just because you want to make sure they make sense, so you push out all of them January invoice out there and say keep this, and then apologize that they never realize why to them are trying so fast and then the deadlines will come up. Yeah. So they get the purchase, you see, the opening stock, all right, then they get the opening stock. So, well, them give opening stock, because they know they end up with opening stock. And normally, and that's another thing with some clients. Them do have closing stock the year before, but them have opening stock the other year. We don't know how it work out when you do the account that do the next file. The accountant who filed with them last year didn't get no closing stock. But you know who filed with them this year, they must say this are the stock for them there. They never realized, say them they have that amount of stock. So cool. Then give you 1 million opening stock, 9 million worth of purchases, then the 10 million worth of invoice, right? Cool. All right, give you 10 million worth of invoice. How much is your sales? So you see, say, the sales.
Excuse me, sir, where
Just
do
listen
this?
to the audio. The video might not, just as long as you're hearing,
Uh-huh,
because you might not see the board as well. So I just want you to hear the explanation,
all right then.
right? Yeah, because it's gonna cause me a lot of problem to keep on moving the laptop over and over, right? So I just want you to hear the explanation. Okay, so if it's 12 million is the sales, cool, and then have a 40% off, then you can say to yourself, all right, to have an idea what the cost of sales is, right? And then now I can tell you what I can tell you from experience. When you tell them cost of sales, so let's say for argument's sake, you say here what happened. You know you give me 10 million year set up, but based on my workings, is 8.5 is the cost of sales here. So now they're gonna say, no, man, hold on. They have one stock code this month. We're gonna show you the stock code. And then we're gonna probably give some 1.1 and 1.2. Because I realize that 300 or 400,000 of them now gonna deal with that. Then prefer work with the list because you already tell them what the cost of sales is. Right? So this is one of the ways to work out cost of sales and it's missing. Right? They don't give you a closing stock, work on the margins, the gross profit margin, yes. The average markup on the top products, correct? Yes. Yes, so using the average on the top products to say, okay, what the margin would have been. So if it's 12 million sales, I mean the cost of sales would have been, you know, would have been divided by whatever, 1.4 or whatever that is, to know what the cost of sales is. Okay? That's that's a major error because that's normally the highest expenditure for a sole trader, right? So normally, yeah, because they be business like that, that normally is one of the major expenditure for them. So if closing stock missing, use GP. Okay. Similarly, when we're looking at revenue, it's the same thing. So in case they didn't give you all the revenue, one of the things you can do is, okay, you have the bank statements. And I can tell you, this is generally when a tax audit occurs, even though that's not what we do now. Normally, what they do is any money that comes in your account, they consider it as income. You have to prove it is not. Even if it is you transferring from one account to the next, you have to prove that it is a transfer, right? So I can tell you about personal experience. I've been audited, right? So I can tell you everything that goes in your account, no matter if it's your grandfather, your sister, your mother, or yourself, transfer from one of your own accounts to another. From go in, that's income. So they just look on all the income and say, this is the money you make. You have to prove that you didn't make that money, right? So that's what you'd have to do as well. But incomplete records, everything coming in. All right, the things that you can identify, that's not income. It's fine if it is clear. For example, you see my NCD loan, you realize I did take out a loan and the loan coming in the bank account. Okay, that is a loan, right? That's not revenue. And that might be a big loan, right? So that's not revenue. That is a loan. So that's fine, right? But what you don't identify, that's another method, is everything that comes in that you cannot clearly identify that it's not income, you're gonna account for it as income. So when you say, never make that money, Mr. Boss, may use a bank statement, right? So that's another method. When you have revenue, you're accounting for revenue, use the bank statements, right? Yeah, a lot of them the cash business, but the ones that you have bank statements, at the bare minimum, what comes in the bank statement at least supposed to be the revenue.
Hi, sir. Could you go
Yes.
back that again, the implications as it regards to loan coming in? I didn't quite get that.
Okay, 1 second. Yes. Go on. Yes. Because a lot of the time, the records are so incomplete, you have to use a bank statement as a mean as a balance, right? So a lot of the time, that's the case. Is that it's so incomplete, you at least have to ensure it with a bank statement because the tax auditor generally, that's the information that they can use as well, right? Because if you destroy the records, then they can estimate on whatever, but they'll ask you to provide your bank statements. Okay? Now, the question, as I said before, if the bank is lending you money and it comes in, it's not considered income, right? So it's not considered revenue. Because if NCB lend you money and you have a Scotia account and then send it to your Scotia account, you borrow it to buy a plant, $10 million, it comes in, the 10 million come in, it's not considered income, right? So it might even be a working capital loan. So you might not even end up purchasing a plant with it. It might just be to sustain the business, right? But the reason why that is a loan is because you're going to be paying monthly on it, right? You're going to be paying the principal and the interest, right? And you cannot treat the principal payment as expense. Another mistake that is made, but this one I consider, you know why I call it a mistake? Because a lot of them will not know to differentiate the interest portion from the principal portion, right? Yeah, man, but them not look at that. Them just know how much them have to pay. The reality is a lot of sole trader just want how much they must pay one time. Them don't really know how much principal remaining up. When you think about it. Yes, expenses. No, that's what I was just saying to you. So that's what I'm just saying. That it's not that they will not record it as income. I can tell you that. They will not mistake that 10 million and put it as sales. They will not. But when they are repaying, that's another thing we have to pull out. So a lot of the things you're not going to see on the paper. And that's why we're doing the practice. We're going to be doing, as I said, a lot of cases we're pulling out information. But for this one, again, as I said, when they're repaying the loan, it's only the interest element must be expense, right? What happens is that the principal portion is supposed to be reducing the liability. So you put it as a liability, 10 million come in. Yes, you debit the bank account because of the cash, and you credit loan. Every time you pay now, you're going to be debiting the loan and crediting the bank account. So you're going to be reducing the loan, reducing the loan, reducing the loan. Yes. So that is one thing that is used as well. So normally you're doing it for the sole trader and then they basically are you do the GCT returns for them on a monthly basis. If everything in it is right, that's normally something you can use, but that means are reconciling as well, especially if they are using the bank account, that is use the bank account as well to see if it matches, it reconciles. Because they will understate. They will, people, you have to decide what you are going to do as the one filing the returns. Yes. Correct. Correct. But a lot of the times, they're not the same. A lot of the times, the people have two sets of financials, one for the bank to get the money and one for the taxman, right? The one for the bank is that things are rosy. They're making 25, 40, $50 million a month. The one for the taxman is that it's just 300,000 coming in sales, right? And again, that's what we just said. If they said they don't want to pay it, that's too much taxes to pay, even though their invoice has plus 15%. It's not their 15%. It's just not your 15%. They're selling for 1 million plus tax. The 1 million a year is not the plus tax. But them said, no way, 150,000 is supposed to pay that. You're not paying that in tax. You just collect that to the tax man, right? So, and that is another thing, basically. They do understate the sales. So I will not say rely on it. You can use it to get a preliminary figure, but then the bank statements. Get the bank statement, get the sales records. If they do print invoices, then get the actual print of the invoices, right? If they do print it, get a report, and then see, because yes, that's enough people do understate and then move around what the sales. They say, no man, next month I'm gonna file it, not the tax this month, right? And then you see they started dancing around the revenue. It's really unfortunate, the things that you witness, right? Yeah. Yeah, man, it's and that's one of the things sometimes I can tell you, and from experience, and this I will go to a client and they say, can prepare the financial summit. I prepare it and I show them that they made a loss. They said, no, man, they made a loss. We said, no. They said, the reason why you made a loss is because you have reported all the information to me. No, man, I'm telling you. They said, no. You have bank accounts that you have not disclosed. Why do you say that? They said, I know you have not disclosed some bank because the information is not adding up. Doesn't make sense, right? There is no way you're spending more than what is coming in, right? It's impossible. And you cannot be lending the business $500,000 every month and 900,000. From where? This is your source of income. Where are you getting cash to deposit and saying you are putting in director's loan? Why is the director's loan going up to $40, $50 million? right? So them say, but so me say, anyway, this is what you want to present to the bank. This is the information you give me. You know, probably I didn't give you this bank account. They said, it's not this one bank account. And then I said, look, here what you decide what you want to do, you're going to use somebody else. But I don't have all the information, I'm not signing up on that. I can send this to you, you're not going to get a signature on it. You can pay me for the compilation, but not my signature. You're not seeing my signature on that information. And if you have to just decide, say, yeah, you're going to me, making money for going to prison, that don't make sense, right? That don't make sense. So it really is just up to you to decide so you're not going to do it. Yes, a lot of the times when I'm doing filing to people, yeah, my signature not go on it too. They use your login. Give me your tax login. Give me the information. I will do the login and put it. But I'm not adding my name to that. So we get as we said, those are some of the key things that are missing. So we have gross profit. We can use sales. We can use our bank statement. Similarly for expenses, and so on, so forth. This year, it gives you a step-by-step guide to incomplete records. So what if certain other things are missing? Now, again, as I said, it's really for you to read and go through if you don't have, if you're, you kind of want to refresh or you really didn't know much. And I really find these chapters and illustrations to be quite self-explanatory. One of the things I'm going to do, there are two things at the back of this chapter that I want you all to do for me. Let me see if I actually edited this note or I have to send it. Okay, it's not there. Okay, y'all can read through that. So the assignment I want to give you all for Thursday is a third in the email that I sent, or I need to send you. In the email I sent that has session 1 handouts, there is an Excel document, there's a trial balance, right? There's an Excel trial balance. What I'm asking you all to do is to prepare an income statement and a balance sheet from the trial balance. In Excel, by the way. That's why it's in Excel. So use the same Excel file at the tab, prepare an income statement and a trial balance from, income statement and a balance sheet from the trial balance that you have. Let's try and do this for Thursday. So yes, it's a short course. We have to get the practice in. We're going to be doing cases in session and for assignment. Because today is the first class, we're not in case want to pressure the brain. But every class, we're going to be doing actual cases. So we're going to spend the first 45 minutes thereabout explaining the topic and then doing practical cases, right? So that's pretty much what we'll be looking at in terms of each topic. So your assignment for Thursday, the trial balance that I've attached in the email, the Excel document, prepare an income statement and a balance sheet from that information. We're going to start the class with that, and then we are going to go on to, looking at GCT, and we'll do our case on GCT, and then you will get your assignment for Monday, right? Because we want to get in as much practice as possible, so that, yes, you have a good grasp of doing all of these filings. So a lot of the things, as I said, the recordings will be shared because some of the things we do discuss are not in the notes, but it is important to remember in terms of your approach. Yes, go ahead. Yes, ma'am, no problem. Yes. 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 It should. Remember the exact items you put in that different line. So your total sales should match back to what you file in your GCT returns. It doesn't mean, as we agree, not everything is taxable. That's what we're going to go in those details on Thursday, right? So we're going to look on what's taxable, what's not, at certain industries that have different tax rates. Yeah, so we'll be looking at that. What is the difference between exempt, right? And right. So those are the allowable and disallowable expenses. But they, so we can, yeah. So we're going to look at some of that, man. Maybe some industries, even certain things that came up, like solar panels and these things, these businesses that are doing certain different things, renewable energy, the exemption that they get. So some of those things we will be looking at in our session on Thursday. So as I said to you, today is the introductory session. Please go through those notes and do your assignment. So you get 1 hour extra that you can spend on doing your assignments. You reach home 1 hour earlier than you're supposed to reach home. So you can use the 1 hour and work on your assignments, right? So please don't come without your assignment, please. And we want to make sure we get as much practice in as possible. And it's not possible to do a whole lot of cases in class. But if we do it like this, we end up doing at least 10 cases, right? Because if we do 1 out of class, 1 in class, 1 out of class, at least we cover at least 10 cases where we actually.
Excuse me,
Yes.
sir. So for those online, should we send them in via email?
Yes or no. Well, normally what I do, I ask to share the screen because I want to go through, and a lot of people don't like to do that. But if you send them in by email, I'm still going to share it, right? So whichever one you want to do, but I prefer if you send them in so I can select 2 or 3 and say, okay, this is good, I'm going to utilize this. Because that's actually what I did with Michael. I used one of the students' response. I don't want to use my response. I want to use somebody who just do it from scratch and then say, okay, let's look at this. Yeah, this is fine. All right. This was probably picked up as an asset. It was an asset. I understand the reason, something like that. Right? So that's it. So please ensure that you do your assignments, read through these notes. They're very good notes. So yes, I skipped through and scanned through what I wanted to look at, but use the time, read through the notes, and as I said, use it Excel trial balance and prepare it for me, please. That's pretty much it for our session. The only thing I'm going to do is take your email before you leave right now and send it to you because I know that as soon as I leave here and I do something else, I'm going to forget. So until next week, everybody, I'm going to sign off from Zoom now.
Sir,
Not next
one
week, until Thursday.
Yeah,
question.
before you
Until
go, I have a
Thursday.
question too.
Yes, go ahead.
For the question that I'm seeing, the documentation there is at December 31st, 2021.
Yes, ma'am.
But
Yeah.
I'm not seeing anything for there's no notation there for opening balances for inventory.
No, man. So that's okay. That's okay. So you're gonna use it as whatever. So one of the things, any trial balance we have, whenever you see inventory in a trial balance, normally is the opening inventory, right? That's normally the basic. It's only closing inventory normally is in the notes, right? But as you don't see any in the notes, work with it
We'd
as
have to
is.
work it out.
As is, working with it as is. I want to keep, this is an actual trial balance I had for an actual client. So I'm actually using the actual thing, right? So don't worry, work out the closing stock, man. Work out the closing stock. And try your best to, as I said, make sure if you can want to link the things to the trial balance, I would like to see that as well. So you know the information linked to your trial balance, try and see if you all can do that. So at least do your research and try and link it, please. Try and link it. Link the figure. So the revenue, link it to the trial balance. Cost of sales, the asset, link them to the trial balance when you're preparing.
Okay, so since you will have to send it in, those who are online,
Yes.
you would want it to be sent beforehand, obviously.
Correct.
What's the deadline to
No,
send
man,
it
an
in?
hour before the class is fine. An hour before the class is fine. 5 o'clock is fine on Thursday.
And another question, for this course, we'll be having like an assessment at the end or during. What's the deal with that?
No. So you'll get a certification. This is why it requires everybody's participation. Once you do your assignments, you submit them. We go through the cases. That's why we're doing so many cases. Then you're going to get a certificate that you have completed this course and you're able to cover these. So there's no assessment in the end, but what we have are the assignments. This is why I'm saying everybody needs to do their assignment.
I have a question as well. For the trial balance that we got, is this a manufacturing account?
It was, yes.
A manufacturing
It was a
company?
manufacturing company. It is a manufacturing company, yes.
Okay.
Yeah, man. All right, very good.
One more, sir. You said for Thursday, we're having
Yes.
class tomorrow as well, right?
No, Mondays and Thursdays.
Mondays and
Thursdays for 3 weeks.
Oh, Mondays and
thought it
Thursdays.
was
I
4
thought it
weeks.
says Monday to Thursday.
No, man, no. That's
It's not 4
me.
weeks?
No, man, that's a clear mistake. No, it's 6 sessions. So it's Mondays and Thursdays for 3 weeks. So it's the rest of
Okay.
January. So it's 6 sessions, Mondays, Thursdays. So this week, next week, following week.
Okay, thank you.
All right, you're welcome.